Very good news and very bad news. Okay. So 5 years from now, I think Tyler will be selling tokens and making lots of money. 15 years from now, I think people like Tyler simply wouldn't exist in this business anymore. So two things will happen. Either Tyler will go out of business or Tyler will upscale. And I'll explain what that upscale means. So hopefully I upscale, you upscale, and we go up. The Amazon effect, the Walmart effect, the airline selling their stuff effect, what it does is it creates a small number of large companies from a large number of small companies, right? And this has happened all the way across. Technology enables the creation of ever bigger companies. If I told you 10 years ago, there'd be 5 companies in America worth $1 trillion, you'd laugh at me. The world wasn't worth, $1 trillion. Countries weren't worth $1 trillion. 5 companies worth 2 trillion. Like, the Amazon and they're all in the $2 trillion range. I'm telling you, they'll be worth 10 trillion because technology creates ever bigger pyramids. The same thing will happen in real estate. Within 15 years, the vast majority of real estate will be conducted by a very small number of companies. Those are the only people that will be able to afford buying these multifamilies. Not you, not me, not future syndicators. So syndication is a flash in the pan. It will come and it will go. Okay. In the long run, we can't exist. Or we are going to be running those big companies that are buying hundreds of billions of dollars in real estate. And why won't be able to compete? Well, here's the good news. Every time an asset goes from being illiquid to liquid, during that phase, that when the switch gets thrown from illiquid asset to liquidity, its value goes completely berserk. It is now in a different class. When stocks in the 80s and the 70s, stocks were liquid. You could trade stocks, but you had to pick up a phone and call a person and wait on the line while that person did a stock transaction. And then you had to send them a check the next day. And then the check would take 5 days to clear. And hopefully by the 6th day, if the stock was still there, then you'd buy that stock, right? And so the value of the US stock market was here. And then through the 80s, then the 90s, and then this massive explosion that we saw in the 2000, obviously that led to the 2000 crash, which is now coming back because now most young Americans whose net worth might be $10,000 have Robinhood accounts with $500 in there. So when this happened, it led to the PE values, the PE multiples of stocks to just keep going up and up and up. Yesterday, the Dow Jones hit 36,000, right? Like there were people saying it'll take until 2050 for the Dow to hit 30,000. Well, in 2021, we've already hit 36,000. In the last 3 months, one person, his name is Elon Musk, has made over $100 billion. $100 billion in 3 months, right? We were saying nobody could make $100 billion. In the 80s, they used to say for a person to be worth $100 billion, it would take us 100 years. Now $100 billion is commonplace, right? As a result, between the illiquid price of real estate today and the liquid price of real estate is a very substantial increase in the value of the asset. So that's good news. People holding asset in the next 10 or 15 years are going to see a new kind of tailwind. We've enjoyed demographics tailwinds. We've enjoyed insufficient construction tailwinds. We're both very aware of those. We're about to get a third one. It's called the liquidity tailwind. So over the next 15 years, it becomes a liquid asset, the value rises. But if we're not careful, 15 years later, we might be very rich, but we might also be out of a job. I think it plays the same role that it plays for stocks. So it took a while for stocks to go from being traded by humans to being traded by computers. But I read recently that today we just hit the 80% point. 80% of all stocks traded today are traded by machines, right? Through rules. Human beings set rules. Usually human beings that have hundreds of billions of dollars set these rules, right? Or Stanford PhDs set these rules. And then the stock trading is done by computers. Now, you might say, yeah, but it took the stock market 3 decades to get to that point. Everything happens faster today. Everything, right? Things that used to take 10 years now take a year because technology is exponential in nature. That word was not understood by people until COVID arrived. March 7th, 30 cases. March 31st, 500,000 cases. Exponential, right? So now people understand exponential and how quickly things can grow. And so because now they understand it, they're beginning to realize that past cycles that used to take decades now take about 18 months. So now, in my mind, we're going to basically get to the point where the good side and the bad side of real estate, the good side being values go up, the bad sides being basically a bunch of us are out of work because we can no longer compete with these highly efficient tech-driven companies. We're going to see a lot of that happen. So we've got some super interesting times. I don't think these are bad times. We've got some super interesting times for real estate in the next 10 years as it goes from a truly illiquid asset to a liquid asset. So imagine what'll happen is that today, Amazon decides that it wants to buy a particular street in Austin. It wants to buy all the homes there because it thinks that that's the greatest street of all time. It can't do it. But 5 years from now, homes on that street are listed on the stock exchange through tokens. So it starts to buy those tokens and it writes an algorithm and it buys that tokens more and more and more and more. And at some point, it now owns the whole street. And once it owns the whole street, guess what it does? It says, this is a terrible use of this street. It should not have single family homes. I'm going to go to the city council and I'm going to turn this into a warehouse. So now for the first time ever, you have the capability of actually restructuring cities by buying pieces of them, which simply doesn't exist today.
Wow.
See where I'm going with this? That's one example. I mean, but 100 examples will follow. Somebody wants to build an airport in the middle of a city. They can do that now because they're basically, everything gets traded on the internet. And you might say, no, I'm going to buy a single family home and not trade it on the internet. I assure you, in 10 years, you will put your house on the web. You will put the house that you own on the web because it would be stupid 10 years from now not to do it because you're monetizing it even though you're living in it. So you'll sell its tokens, still maintaining enough stock so nobody can kick you out, and then you'll pay rent because those tokens will make you a lot more money than the rent you're paying.